Hi guys, welcome to my YouTube channel and welcome to my new YouTube video. This video I am going to discuss about why 90% of traders fail in stock market. Statistics says that 90% of traders fail in stock market and only 10% of traders become successful and goes on to become successful day trader who takes up trading as a full-time profession. So what is that reason that 90% of traders fail in stock market? So what is that wrong thing they do it 90% of traders fail in stock market? Trading is all about three important things. One is having a good strategy having an edge, because if you don't have strategy you are not going to become profitable. Second is you need to have a good risk management. You need to know how to manage your risk in trading. Third is trading psychology. Trading psychology is all about how to control your emotion during live trading. Risk management and about the strategy you can learn from anywhere. Like you can read some books, you can learn about risk management, or you can learn about strategies by reading some books, or you can attend my webinar and you can learn what are the day trading strategies I use, what are the day trading patterns, how to trade with the help of pivot points and price action. You can learn it by attending my webinar. Risk management, position sizing, that also I teach in my webinar. You can attend it and you can learn it. But trading psychology is the most difficult. I can tell you about how to handle emotion, how to control your emotion, everything in my webinar, but it is up to you in the live market how you trade it. Live market, how to you follow the rule, how you control your emotions. So that is where 90% of traders fail in stock market. So the answer is 90% of traders fail in stock market because of trading psychology, not able to handle their emotion while trading. That is where they fail. Assume that you attended some world famous traders workshop at some exotic location in foreign country by paying millions of dollars. Still you can be a failure trader even after attending his workshop or seminar. Why? Because if you don't have the right mindset, if you don't have the trading psychology or mindset of that world famous trader, still you can be a failure trader even though you have its strategy. So remember, strategy is important, but same time you need to have right mindset and right trading psychology. I have mentioned about this book called Market Wizards, written by Jack Schweizer. In this book, Jack Schweizer has personally interviewed to top 20 traders of the world and personally asked their method, their strategies, how they trade, how they have become successful traders. Once you finish reading this book, you will realize that all 20 traders have different methods. Some use price action, some use data, some use some other method. Many different methods they use. All 20 use different methods, but still they are successful traders. If there was only magic strategy, or if there was only one magic indicator which only 10% traders knows, then all 20 would have been using the same method, right? Same magic strategy or magic indicator they would have been using. So that means all successful traders have their own method, own strategy, own style of trading. So they are not successful just because of only strategy. They have right mindset. They know what is trading psychology. They know how to control their emotion during trading. That's why they are successful in trading. So that's what this video is all about. This video I am going to discuss what is that trading psychology, how to control your emotion during live market, how struggling or new traders thinks in the live market and eventually he breaks his rule and finally he loses money. So that all I am going to discuss in today's video. So watch this video till the end, so you will learn many new things. You will know what is trading psychology, how to control your emotion, what you should do, what you should not do. So I made a presentation on my laptop. I'll show you with the help of my laptop and I'll explain everything in detail. So watch this video till the end. Okay, before I go to my laptop screen, if you are new to my YouTube channel, or if you have been watching my YouTube videos but still not subscribed to my channel, I request you to go to below this video and there is a subscribe button. Hit the subscribe button so that you will get a notification whenever I upload newer videos, and same time I also get motivation to upload more videos like that, more educational videos, because it may look like 20 minutes video, 25 minutes videos, but it takes a lot of effort in preparing, planning, and then preparing the presentation, then recording the video, shooting the video, and then editing the video. It takes a lot of effort in giving this 20 minutes of videos. So my request is hit the subscribe button and then I'll take you my laptop screen and I'll discuss everything. Okay guys, welcome again, and now I am going to discuss why 90% of traders fail in stock market. I discussed earlier, to become a successful trader you need three things: strategy, risk management, and trading psychology. Strategy is only 20% of successful trading. Next comes risk management. Risk management all about how to do position sizing in day trading, how much position you have to take so that you are within your risk control, so that you don't take big trades and lose big money, so that you always
remain within your risk. That is what risk management is. Third is trading psychology. That is what most important in trading. How to control your emotion, how to control your mind, how to remain disciplined. All these are important. As I said earlier, strategy I can teach you. You can join my webinar and I'll teach you what is day trading strategy, which are the patterns. I can teach you around 15 strategies in day trading, which I follow based on pure points and price action. I can teach you about risk management and how to do position sizing, how to use the formula and how to take your position before taking the trade. That I can teach you. But trading psychology, something which it has to come from you. I can only tell you about trading psychology, what you should do, what you should not do. But in live market, how you control your mind, how you control your emotion, it totally depends on you. That's why most of the traders fail, because they master strategies and they master risk management, but they struggle in this one. So earlier you master your mind, earlier you learn trading psychology, earlier you can become successful trader. So you are losing money because of trading psychology. You are not able to control your emotion. That is where 90% of traders fail and only 10% of traders are successful, because they know that what is trading psychology, what they should do, what they should not do, how to control their emotion, everything. This 10% of traders know it. Remember this, trading is mainly mind game. This I keep saying it always. Trading is mainly mind game, which I realized after 15 years being in stock market. We as a human beings don't want to be wrong, right? Do you want to be wrong? No, you always want to be right. Why? When we were small, when we were kids, when we were in school, we were always punished when we were wrong, right? Punished by our parents, punished by our school teacher when we were wrong. But when we were right, we always were rewarded by our parents, rewarded by our teacher. So that is how human mind is wired in such a way. Okay, so that is what we have been taught since our childhood, that we always should be right, we should not be wrong. That's what our mind is wired in such a way, like that. Okay, that's why in trading what happens, you take a long trade thinking that market will go up, but market doesn't go up, market comes down, then you are wrong, right? But your mind doesn't allow you to accept that you are wrong, take your loss and exit the trade. You want to be right, so you will not take your stop loss, because once you take the stop loss, then only you are wrong, right? Until you don't take stop loss, you're still in the trade. That's why our mind says that don't take the loss, don't take the loss. Our mind doesn't allow to accept us that we are wrong. Our ego doesn't allow to accept that we are wrong, and we have taken trade here thinking that market will go up. And when we see that market is reversed, we should have taken our stop loss because we are wrong and exited, kept on going down. We still in that trade, hoping that market will reverse and finally ending with a big loss. That is what human emotion all about. That is what makes many people lose their entire capital. That's why people say that I lost 5 lakh rupees, I lost 2 lakh rupees in trading, because they are not taking their small losses and they want to be right. They don't want to be wrong. That is where they lose money. We go through all and every emotion during trade and take trades based on emotion, which ends up in losing big money. That is how traders goes through big loss, and that is how you'll go through all this emotion during trading. Sometimes you are sad, sometimes you feel happy if your market trade is going as per your direction, it's in the profit. Sometimes you are angry if your stop loss hits. That is how traders go through all this emotion during the live market. And what successful 10% traders do, they understand these facts and trade emotionless and strictly follow the system and finally succeed in this business. They don't think like that, oh, I should be right, let me not take the stop loss, market may bounce. They don't think all this. They enter the trade here thinking the market will go long, market doesn't go long, market reverses, they keep the stop loss, take a stop loss and they exit. That's it, over. Common emotion faced during trading are greed. Greed will make you rise your profit target too high, eventually losing whatever profit which you already had. Okay. Second thing is fear. Fear causes you to book quick and small profit, eventually breaking your rules. Hope. Hope is the dangerous one, which make you stay in losing trade and hoping for a turnaround and eventually blowing up your account. This is the most dangerous among compared to all these three emotions. Now I show you this with the help of chart. Okay, how traders thinks in the live market. Okay. let me go through this greed, how greed works in the live market. Suppose you are taking a trade here. Okay, first trade you have seen that first candle, bullish candle above the CPR, taking a support and have a support below its CPR. So think that I'll buy here, right? And why do you decide where you will book the profit? You see that there is a weekly pivot here. This is a weekly pivot. Okay, what you see here. You think that okay, I'll take a long position and I'll book my profit at the weekly pivot. And you go long, and once it hits as per your expectation, you have taken the profit and you are trading with 2R, and you are happy that oh, I made a good profit, and you are happy that this trade worked for you and made good profit. But what happens after that? After that, you see that after that it went little bit down, and finally it went to so high that finally it went up to this level, almost 4R. You booked your profit at 2R, but it went up to 4R. Now you are repenting. You are thinking that why did I take my profit here? I should have waited for some time. I could have made more profit, and you are repenting now. That is what greed is all about. Then what you decide, next day you decide, next time what I'll do, I'll not take my profit at 2R. Now I'll go for 4R. I'll take my profit only at 4R. Last time I booked profit too early and I missed this opportunity. Now again, next day also same pattern. This day also it took support above CPR. This candle also took support above CPR, and you took another long trade and you kept your stop loss here. Okay, this level, you took a long trade. This day also it worked for you, almost 2R. But what you did not book the profit because of earlier, you booked the profit, market went up, and you missed the big opportunity to book the profit. Now you did not book the profit here. This is monthly pivot, okay, red color what you see. Market went up to the monthly pivot and reversed. And what happened? Finally came and hit your stop loss. So winning position turned into losing position because you broke the rule due to greed. That is what greed makes you. This time you repented because your 2R became 4R. You did not book the profit. You booked the profit too early. This time you decided, I'll not book the profit at 2R. I will make huge profit, and market reversed. So that is what greed will make you lose whatever you had. That's why what you should do, always trade with strict risk reward. That means maybe 1:2 kind of risk reward. Once it hits your reward, just book your profit and exit or trail your profit, but not like this. In this day, you did not take your profit here, and finally you lost. That is what greed makes you. That is what rules. Here you broke the rule, right? Your rule was to take 2R. This day you broke the rule and finally you lost money. Now I'll show you about the fear, how fear works in the live market. Now another day you took long trade here because it's bullish market taking support above the CPR, and what your target was here, right? Profit target was 2R. As per your expectation, once you took the trade, went all the way till here, almost 1.5R. But here was your profit target, but market reversed. Okay, market reversed and your stop loss below CPR. Felt bad because you were already in the profit. Your buy price was here. Already you were in the profit. You did not book the profit, and finally you hit the stop loss. Second day again you came, same pattern. Again it went almost near your profit target and reversed, hit your stop loss. 2 times hit your stop loss. Because in the profit, you did not book the profit, hit your stop loss. Now what you decide? Enough is enough. Now I will not leave. Whatever profit comes, I'll book the profit and I take small profit because 2 times hit my stop loss. Now I forget about risk management, risk reward. And when you think like that, that is the end of it. That is the day you broke the rule. Because next time you take another trade, and what you did, market again went up. This time again initially target was 2R because there was a daily pivot here, but market again reversed. So now what you say, yeah, I remember last time what happened. I did not book my profit because I was looking for 2R. It reversed and hit my stop loss. Today I'm not going to leave. Whatever profit comes, I'll book my profit. And you book your profit somewhere here. Once it is coming down, then what happens? Market doesn't come down and keeps going up and hits your profit target, and finally even goes up and goes up almost as much as 4R, and you will start repenting again because the target was here which already hit, but you booked profit, just small profit of 0.3R. You broke your rule. Your rule was taking 1 to 2 risk reward, but you are out of this trade with a small profit, which hit your profit target had you waited for it, right? That is what happens, right? Ask yourself, doesn't it happen with you? It happened with me when I was new, because you booked profit too early due to fear and missed the target. That is why you should follow the rule. If your risk reward is 1:2, irrespective of what happened in earlier trade, you should follow it. Now let me give another last example about the hope. I discussed fear, greed. Hope is the most dangerous among all three emotions. Why? This day, your first candle, you saw that bullish green candle, you went and bought it, and you kept your stop loss below this candle, green candle. What happened? Market reversed, hit your stop loss, and the moment hit your stop loss, next candle only took the support near the CPR and bounced. And where it bounced to where your profit target. Your profit target was here, but it hits your stop loss and then hits the profit target. Tell me how you feel. It hits your stop loss and then market goes up. And you feel very frustrated, right? What happened? Like, why it hit my stop loss and it went up? Had I kept my stop loss a little bit away, then I would have made profit and all this, right? Now what to think? Next time what I'll do, I'll not keep stop loss only. I'll not keep stop loss because my stop loss hits and went up. Somebody purposefully done it. Somebody operator or broker must have purposefully taken my stop loss. I'll not keep the stop loss only. Next day, same pattern happens like this, and you decide I'll not keep stop loss today. Today I'll trade without the stop loss because last time hit my stop loss and then went up. Today I'll not keep stop loss because I know that takes my stop loss and goes like that. So you take the trade, but you are supposed to keep your stop loss below the candle somewhere here. You did not keep stop loss. You bought here, market came near the stop loss and bounced. Now you feel very proud. You feel that, oh, see how I told you that it will come, take my stop loss and then market goes up, because last time it happened, this time also it's going to happen, because you saw this green candle, you thought market will go like this, but what happened? It reversed, and you are now the big loss, and almost it came here. You did not take the stop loss, you did not your stop loss because you just still thinking that last time market bounced, this time also market will bounce, came down and then started bouncing again. You were hopeful. Again, you are hopeful that, okay, last time it bounced from here, maybe this time it will bounce and goes up here. But no, market bounces, again reverses. Finally, market close, near the market close, your broker will square off your position because you did not square off your position, or you only square off your position at the big loss. That is what hope can do for you. Did not keep the stop loss due to previous experience and due to hope that finally ended with a big loss. So that is what hope is the most dangerous. Don't keep hope in stock market. Follow entry exit rule. Keep your stop loss. Don't go with your emotion. Bought here and you book your loss here. And remember how much big loss. So that is how traders blow up their account. Why 90% of traders fail? Okay, so these are the reason. Revenge trading is one of the reason. Rushing into new trade immediately to cover up their losses of earlier trade. One of the biggest problem many new traders goes through, because when the trade hits the stop loss, they get very angry and they will keep trading until their losses are covered and finally ends up with a big loss. So never get into revenge trading. If your stop loss hits, accept it and wait for the next trade. Don't take irrational trades to cover up your loss. Fear of missing out. Some people takes a trade before it comes to right location in the fear of missing out of the opportunity. That is also one of the biggest problem, also known as FOMO. Again, I say that there are 240 trading days in a year. If you don't trade one day, still you have left with 239 trading days. Think like that. Don't worry about missing the trade. Over trading, taking 10 to 15 trades per day because of fun or excitement, or because they feel that day trader, so they need to be busy taking the trades entire day. That's what many traders think, that once they become full-time trader, they have to be busy from taking trades from morning to evening. That is not true. Day trading doesn't mean that you have to take 10-15 trades per day. Even 1 or 2 good trades per day enough to stay profitable. Trading should be boring. Trading should not be fun and excitement. Why boring? Because you need to wait for the right location, right pattern to take your trades. Staying in a losing trade, hoping that market will turn around, at least they can exit at break even. That is the reason why people make a huge losses. They say that I lost so much money in trading. Trading is a gambling, that, this and all this, because they don't accept that it is their mistake. They try to blame on others. Not showing discipline to stick to strict risk of 1 to 2% per trade. This is also reason why many people make big losses, because if the trading capital is 1 lakh, they don't know how much they have to risk. They risk all entire their capital in a single trade and they lose all the money. Okay, so that's why you should risk only part of your trading capital. Constantly changing the strategy system in the search of holy grail strategy and eventually not mastering any strategy. See, last 2 years I have been trading only pivot points and price action. I don't take any other method, or I don't follow any other method, because even though it is not 100% success rate or 100% wins every time it gives, because I know that it's a high probability strategy which I'm using. So I'm not trying to learn many new things. Only one thing I learned, that is pivot point price action, and I try to master it. So that's what I'm doing. Whatever I get to read on, everything I try to focus only on pivot points and price action. Even though I'm doing some back testing, I'll do only on pivot points and price action. So my advice to all, learn any good strategy and give it some time, focus on that strategy. Don't keep jumping from one strategy to another strategy every second day. Finally, you will not master anything, and keep running around the new strategy every time, and you finally don't master anything. Remember this quote from Bruce Lee. This is what Bruce Lee said. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So this quote is same applies for trading. Don't keep trying for new strategy every day. Okay, try one strategy and practice it and finally master it. So this is all about why 90% of traders fail in stock markets. And if you are interested to know more about trading psychology, more about risk management, more about my day trading patterns, day trading strategies, how to use pivot points and price action in day trading, you can learn by attending my webinar, where I given the link in the description below, and you can learn it from there, and you can learn how to do day trading. Okay, thanks guys, and thanks for your support. And if you like my video, if you like this video, please like and please share it with your networks, and please subscribe to my channel. Okay, I'll come back again with the next video. Thanks.